Hi, everyone. This is Jason Burek of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He is president of the Ludwig von Mises Institute, where he serves as writer, public speaker, and advocate for prosperity, markets, and civil society. He previously worked as a longtime advisor and chief of staff to Congressman Ron Paul. Jeff Deist, thank you for joining me again.
Hey, thank you for having me, Jason.
So, Jeff, the Mises Institute, forward-thinking, always warning people that there's misallocations of capital, that what the central banks and governments are doing are wrong. And finally, the last couple months, all this craziness has ensued. There's been almost a new bailout every single day. And the Mises Institute recently just released this ebook. It's called Anatomy of the Crash, the Financial Crisis of 2020. You wrote the introduction. My friend Tho Bishop also edited it. I think it's free for people to download. What's in the ebook?
Well, it's basically a series of essays about the great crash of 2020 and some of the issues leading up to it, because our great fear is that this crash that we're in the midst of, and it is quite literally a crash. I mean, even the Fed Bank of Atlanta is estimating now a 51% drop in GDP for the second quarter of 2020 year over year. 51%, not 40 anymore, 51%. That's a crash by anybody's measure. But our concern is that this will be blamed, or they'll get away with blaming it on the COVID-19 pandemic. And that is not correct. I argue in an essay in this ebook that the COVID crisis was a precipitating cause of the, not an underlying cause, meaning that it was sort of the straw that broke the camel's back, because there were huge concerns in the economy, huge flashing yellow lights, and huge sort of structural problems with respect to debt, with respect to annual deficits, congressional spending, with respect to what I consider anyway, in my opinion, huge amounts of malinvestment in the corporate sector because of interest rates being so low for so long. And basically a whole lot of problems surrounding debt, which were laid bare in the 2008 crash and never truly dealt with. In other words, we never really allowed all of the firms and businesses and corporations and even individuals to go bankrupt or become insolvent and have their assets rearranged way back when. In other words, we reinflated a bubble rather than dealing with the pain. And so a lot of people responded to that reinflation, as you might expect, by getting even more debt. And so all of the problems from 2008 were actually much bigger in 2020. So you add to that this crazy virus that came along out of nowhere, and you have a perfect storm of sorts. But the idea behind the ebook was to illustrate a lot of the structural problems that were already there, and they were just waiting for a match to start the fire, so to speak.
Yeah, besides the virus being blamed for the economic problems, the other thing that worries me, Jeff, is that capitalism is also going to get blamed. Like, central banks are not a part of capitalism. Enormous governments, enormous government bureaucrats, bureaucracies, government agencies, rules, regulations, taxes. This is not free markets. This is not voluntary capitalism where governments and central banks are picking out winners and losers, deciding that the airlines is getting $50 billion of bailouts. The employees are being put on furlough. They did a ton of share buybacks. The corporate executives are not getting fired. And yet other industries, other companies in other industries are getting almost nothing compared to some of these other winners and losers.
Yeah, I mean, it's unbelievable, isn't it? We saw this in 2008. We saw capitalism blamed. Oh my gosh, it was unregulated capitalism and greed and this and that, and we're having to fight that again, and we're having to fight it on steroids. I was just reading the other day, there's a budget airline in Europe called Ryanair, which is kind of like our Southwest or our JetBlue or something like that here in the States. And so Ryanair is not only frugal with their fares, they're frugal with their pretzels and their peanuts, and apparently with their operations too, because they've been profitable for a long time. They've had a healthy cash balance sheet for a long time, as opposed to, let's say, an airline like Alitalia, which is the Italian airline, which has been profitable exactly 1 year since it came online, I think in around 1950. Okay. So Ryanair, the CEO, was complaining, and I think rightfully so, that his airline's going to have to compete with all these European airlines, which are going to be bailed out. And that's, of course, very much the case here in the United States as well. I mean, what we've seen is that this was never capitalism. This was a bunch of companies that were responding to what I would consider perverse incentives created by the Fed, which in particular, low interest rates. And they were saying, hey, if we can borrow money really cheap, let's do so. As a matter of fact, let's even borrow money and buy back our own stock. Well, 2008 wasn't all that long ago. 9/11, the terrorist attacks in September of 2001 is not that long ago. And there was a huge fall in travel and tourism following those attacks. And airlines had a really rough time. And there are plenty of people who work at airlines in a corporate or fiscal capacity who very well remember the time after 9/11, who very well remember the crash of 2008, and who very well ought to understand that it's precisely times like that require more cash on the balance sheet. They should have been more prepared for this, especially since airline profits have been pretty strong the last few years, and because, at least in part, oil has been really cheap the last few years, and jet fuel is one of the biggest costs airlines incur, along with their aircraft themselves. So they really should have seen this coming. They should have done a better job of having more cash on their balance sheet. But in a sense, Jason, they were rational. I mean, they responded to the incentives given to them by the Fed, which I wouldn't consider capitalism. And they borrowed money and they bought back stock, which drives up earnings per share, which makes the board look better, which makes the management look better. And they applied a short-term, high time preference approach to how they operate their airlines. And short-term thinking and high time preference thinking is really not part of capitalism. It's part of cronyism. It's when you know that gains are rewarded and losses are bailed out or subsidized. And you know what? From that perspective, the airlines were rational because they are being bailed out. They are absolutely being bailed out. And Boeing, wow, Boeing, another company which is a huge recipient of federal largesse, not only by selling aircraft to the U.S. government in a defense capability, but also through the Export-Import Bank, which is a subsidy to Boeing, backstopped by American taxpayers. So this is a huge concern when you see these companies and these industries being bailed out, and such a tiny amount of the CARES Act money, over $2 trillion, actually trickling down to average people, to mom and pop stores. Just a couple of days ago in the mail, I got one of the CARES Act's check that was inadvertently delivered to my house when it was for somebody else in the neighborhood. And I was thinking to myself, how many months has it been since they passed that bill? I mean, it takes them this long to get a lousy $1,200 check to somebody. And what if that person's really dependent on that money, is really counting on it? I mean, what a crazy government. So most of the money went to big corporations, shocker. Most of the money benefits Wall Street, shocker. And we call it capitalism. I would say it's any time you have money controlled by a central bank, as you said earlier, I don't consider that capitalism. And it's a huge concern, because we have a situation now where, in terms of public perception, you have a huge number of Americans looking at all this and drawing the wrong conclusions. So that's a big reason why the Mises Institute exists. We try to educate the intelligent layperson. We're not here for the politicians. We're not here for public policy or any of that nonsense. We're not here to provide white papers to,
think tanks here in DC.
Yeah. I mean, we're here to hopefully cut through the BS for the intelligent layperson who's interested. That's our goal.
Yeah, the think tanks here in DC, the Republican think tanks that pretend to be pro-capitalism until the asset prices fall, and then it's time to hand out MMT checks.
Yeah, and MMT is not going away. There's an op-ed in today's Wall Street Journal by former Senator Phil Gramm, who is head of the Senate Banking Committee. And, he said, this isn't the same. The first time we bailed everyone out in 2008, a lot of that money just went into bank reserves and and also there was a big incentive for banks to sit on those reserves, because of the first time ever the Fed started paying interest on them. But he lays out some interesting points in the op-ed as to why this time a lot of that lending may actually go out and slosh into the general economy. So, this is not an academic exercise. This is real world stuff that's going to affect people. And everybody needs to understand or ought to understand more about what the Fed's doing, because it affects us in so many ways. I mean, it's not just a matter for Wall Street or for macroeconomics or for geopolitics. I mean, it comes right down to the shrinkflation on that little tub of ice cream you're buying at the grocery store. I mean, the Fed plays a role in that. So we can't escape it. Very few of us are wealthy enough to diversify across currencies or across political jurisdictions, to have more than one passport, to have a home or a second passport or anything like that. So most of us, listening, are stuck with the U.S. dollar. So we ought to be worried about what they're doing to it.
Yeah, none of this is possible with big government spending, the welfare or warfare state. I try to tell people this, that you have to understand the Fed. None of this is possible without the central bank doing what it's been doing for at least the last 10 years, how it's increased massively, papering over bailouts. The real number, Jeff, Ron Paul was able to get the one-time partial Fed audit, but then there was the Bloomberg News Freedom of Information Act request, and we found out even more information in 30,000 pages of documents. The Levy Institute went through it. And so Dr. Ron Paul said that the one-time partial audit he got was 19 trillion, give or take, that the Fed had given out in emergency bailout money to foreign governments, foreign central banks, foreign private companies, multinational companies in 2008 to paper everything over to try to restart to save the global financial system and the derivatives markets. But the real number, according to the Levy Institute, was actually $29 trillion to quote unquote save the system.
Yeah, there was a lot of unholy things happening quietly, almost off balance sheet in 2008. One of those was a currency exchange swap with the EU, with the ECB, because the dollar was viewed as the stronger currency at the time. And so we swapped euros for dollars for a period. And there was a lot happening then. And it's very, very difficult in the midst of a crisis, just like we're seeing now with the coronavirus, to really understand everything that's happening. The term for that in warfare is the fog of war. And there's a fog during crises as well. And so a lot of that stuff gets examined afterwards when it's too late to do much about it. I think David Stockman's book, The Great Deformation, is probably the best blow-by-blow account of what happened in those crazy couple of months around the crash of 2008, where Lehman Brothers went bankrupt, and Secretary Paulson was having secret meetings with people from the Fed and closed doors, and all these things were being decided and happening. And we have the benefit of hindsight now. We ought to apply that same hindsight to what's happening in 2020 and try to rein in Jerome Powell before he sends us into absolute hyperdrive, because the idea that the Fed can simply create unlimited amounts of what they call liquidity. They always use this vague and nebulous term, liquidity. Well, what the hell is liquidity? Well, liquidity it's just a euphemism for ready money, ready available money that's not tied up. When they say liquidity, what they really mean is actual physical currency and bank deposits, bank reserves. When they say they can create unlimited amounts of liquidity, then the obvious response to that is, well, why doesn't every central bank on earth do that? If we can effectively recapitalize our banks and try to get them to lend more money, and we can do that by buying assets from them, assets which are mostly treasury debt created by our own government. And we can perform all this in sort of a strange circular act of musical chairs. And we can do all this without cost. In other words, the Fed's balance sheet can be 4 trillion like it was, or it can be 7.9 trillion, whatever it is today, or it can be 10. Well, why not 50 or 100 trillion? And if why not 50 or 100 trillion, why can't the ECB do the same? Why can't the Bank of Zimbabwe do the same? Well, okay. What Paul Krugman would say is because they're not the world's reserve currency. Yeah, okay, fair enough. But at some point, I think even the most ardent MMTer recognizes that there are limits to this. And we know there are limits to this. We know that people recognize it because Fed does it in increments. Congress spends in increments. In other words, when Congress says we're going to create $2.9 or $2.6 trillion in this CARES Act. Why don't they make it 4.6 or 10.6? In other words, everyone sort of recognizes that at some point you actually have to produce some goods and services in an economy, and no amount of newly created congressional stimulus, no amount of newly created central bank liquidity, no amount of bank malarkey actually creates a single new good or service in the economy. None of it makes us any richer. It just makes us more liquid. It just stimulates us to go out and buy and borrow. Well, that's not how you build an economy. I mean, if we strip away a lot of what we think of as economics in the 20th century after the 30s, which was when John Maynard Keynes came out with his general theory, if you strip away a lot of economics, you'll find that the 20th century is basically wrong. It said that the role of government and the role of central banks is to stimulate demand, and that's what economics is all about. That's how you build an economy. You figure out how to get people to buy and want more stuff. And you and I would argue that the opposite is true, is that you build an economy around production. And this is something Jean-Baptiste Say, a French economist, spelled out more than 100 years ago. That Say's law is that production creates consumption. Production precedes consumption. The only way to make an economy wealthier is to save up capital by having profits in excess of what you spend, and to use that saved up capital to employ towards more and more productive uses. The reason you and I are wealthier today is because we don't have to walk or ride a horse to our destination. We can get in a car and drive there much quicker and more comfortably, and with less wear and tear on our bodies or on the horse or whatever it might be. And the reason for that is because people saved up investment capital and eventually developed the automobile. They didn't do this out of the goodness of their hearts. They did it because they thought it was a cool idea that would make them rich. And it did make some of them rich. And you and I are the beneficiaries today of that technology. So that's, that's how society develops, through the accumulation of capital, not through spending the capital that our grandparents built up. So we are perversely doing that instead of what we ought to be doing.
Or people are taking on debt to spend. But I think everything is so financialized. This is an important point right now, that over the last few decades, especially since Nixon severed the last vestiges of the international gold standard in 1971, the derivatives market had exploded. We have derivatives now globally that are hundreds of trillions, if not a quadrillion in gross. There's no way the banks can handle, and governments or central banks can handle losses like that. So if one bank goes down, pretty much the counterparty risk is just going to explode. We saw this in 2008. So why do we need a derivatives market that's that large when there's no underlying assets or cash flows to support it? It doesn't make much sense. It basically guarantees that there's going to have to be bailouts and rules changes. The other thing is total debt, like you said. So there's a total amount of debt at the government level, the corporate level, small business, family, society. It's over $250 trillion and still growing. It's not mathematically possible to pay all the debt back. So why do they keep doing more and more debt? Now, I know the global financial system with the digital debt-based fiat currency, it has to keep growing credit, but it's a Ponzi scheme, Jeff, because the debt cannot mathematically be paid back. And then when the debt's paid back, it starts to, when credit falls, things start to get really, really dicey in the whole system.
Well, not only is it a Ponzi scheme, it's one that we are going to try to evade responsibility for and foist off on our grandchildren. And so that brings a whole different cultural and moral element to all of this. This isn't just economics and finances. This resonates throughout, our whole culture, throughout what's going to be our history. So we have to think about it in those terms. I mean, if there's going to be pain, then let's bear that pain ourselves. Let's not push that off on people into the future. And, there obviously needs to be some sort of debt jubilee. It effectively some sort of bankruptcy and restructuring of the debt that's held all around the world, because it's not payable, as you say. And so we'd all be better off if we could get to some sort of honest point and where we revalue everything in society, market to market, so to say, mark to market, all the assets in the country or in the global economy, and tear the Band-Aid off and deal with the pain. Politically, that's very, very difficult. We have to understand that there's a huge incentive for Western politicians to tell people happy things and to kick the can down the road. We've told millions of people just here in the United States that once they turn 65, they're going to start getting Social Security and Medicare payments. And so an awful lot of people are banking on that and expecting that and presuming that that'll actually be paid in not just nominal terms, but in terms that actually have some sort of purchasing power. There's over $200 trillion shortfall has been estimated by an economist named Lawrence Kotlikoff at Princeton in terms of the likely, even under a fairly rosy scenario, the likely expected future tax revenue versus the likely future expected costs of paying for older people's Social Security and Medicare. So the delta between that and net present value is over $200 trillion. So another thing that's not even debt. In other words, this doesn't exist as debt on the balance sheet of the United States government. These are just entitlement promises, and since they're just promises rather than actual, treasury debt, they don't, you can keep them off balance sheet in a way that a company could never do so under GAAP accounting rules, by the way. Future pension liabilities, which is what they are effectively. That's what Social Security and Medicare represent, is unfunded future pension liabilities of the United States government. That's very, very frightening. So that, anybody listening, the first thing you can do is start looking at your retirement and rethinking it, because I think for most of us, unless you're fairly wealthy, if you look at how low interest rates are and how likely they probably will remain, the amount of income you're going to make, even if you have $1 million or $2 million at retirement, is not going to be enough to sustain you. So the best thing you can do, the best asset you have, is your own physical and mental health. The ability to go out there and make a living and earn money might be worth far more than any money you've got in the bank or stocks you own or something like that, because those things can be devalued awfully quickly. So this is where we are. We ought to, in my opinion, we ought to face up to it. We ought to deal with it now. And if that means that the country has to accept a lower standard of living for 5 or 10 or 20 years, as long as we do it right and actually rebuild a foundation, I think it would be well worth it. And, honestly, if we could get government out of the way in this country, it wouldn't take that long. We could be back on firm footing very, very quickly, because relative to the rest of the world, we ought to just be a beacon of relative open markets. We ought to be a place where capital is respected and treated well and thus attracted. As bad as all this sounds, and it sounds like we're painting a pretty grim picture, we have to remember that the United States has been very resilient throughout its history. The United States is still, I would argue, more amenable to markets and property rights than most of the world, not all, but most. And, we still have huge strengths in this country. We have our universities, as much as we like to bitch and moan about their indoctrination, they're still considered the best in the world. People still come here from all over the world to go to places like Harvard and Stanford and Yale and MIT. We have acres and, millions of acres of arable, usable timber in this country. We have millions of acres of arable farmland, plenty of farmland to feed not only ourselves, but also to export food to the world. We have more oil and natural gas than we could probably ever use. In fact, we won't even exploit it at these prices. So, if you just look at America on paper, and separate the American people and American resources from all the bad things that government and the central bank are doing, there's still no reason why we couldn't have a serious resurgence in this country.
Yeah, I think the problem is central banks and government. And if they just got out of the way, they allowed small business and entrepreneurs and people to actually innovate and create new products and services, I think there would be a lot more wealth in society in the next couple decades. But unfortunately, government has a way of wanting to control things. Look at all the politicians here in DC, Republicans and Democrats, discussing new multi-trillion-dollar spending packages if the dollar stays relatively strong. Is there actually a way to measure the amount of economic damage that has been done so far? Have you seen any estimates? It has to be in the trillions, right, of the amount of economic damage that that has been done in the U.S. economy so far, with small business owners that have already closed or gone bankrupt?
Well, I have seen some estimates in the form of work hours lost, real unemployment as opposed to reported unemployment. Most interestingly, I saw an article recently, just a couple of days ago, in The Hill, which is a publication of Capitol Hill, mostly read by staffers there, that attempted to calculate how many life hours had been lost to the virus and a shutdown so far, because people will die earlier due to not going to see the doctor. All kinds of people out there have tumors or other health problems, so they'll have reduced lifespans as a result. And of course, unemployment and poverty reduce lifespans. So the article in question actually tried to estimate how many hours of lifetime, how many millions of hours of lifetime, which isn't an economic calculation so much as it is a human calculation, have been lost so far. So that stuff is interesting, but that goes to Bastiat's concept of the seen and the unseen. That's the thing about economics and social sciences in general, is that we're very good at pointing out what's right in front of us. Like government taxes people, Jason, it takes that money and it builds a big housing unit and puts some poor people in the housing unit. And you point to that and say, see, we used some taxpayer money and we built some low income housing, and these people who used to be homeless or nearly homeless living in a cheap hotel, now live here. Look at what we were able to do. So that's the seen. The unseen is all the other things that could have been done with the money if it hadn't been taxed. The ripple effects throughout the economy. And this is a real challenge for social scientists, is trying to paint a picture of the unseen, trying to put sketch some parameters to the unseen, to apply some numbers to the unseen. It really is the biggest challenge in economics, is to show people give people a conception of what can't be seen right in front of them. So I don't know. It's incalculable, because
it has to be in the trillions, but I have no idea how many trillions.
But there's more. There's been a spike in suicides since the shutdown. It really is. How many young people will be damaged throughout their careers as a result of starting off maybe at a lower rung on the ladder? How many older people will never retire, or retire at a much less, at a much lower standard of living than they planned? This kind of stuff it's economics, but it's also the stuff of life. And we can all understand what led up to the crash of 2008. We can make sense of it. We can be angry about it. We can blame the Fed. We can blame the Treasury Department. We can do all kinds of things. But people were able to go out and still operate their businesses, still try to do things in life. This time, a literal shutdown of business and forcing people to stay home and wait for a government check. This is a self-inflicted wound that's so hard to just grasp, that we would do this to ourselves over what I think was a huge overreaction to a virus we could have dealt with. That's what's so maddening about it, is that we did it to ourselves.
Yeah, there was relative freedom for people to start their own business. And yes, there was higher taxes and rules and regulations, but people could still start a business and build it up. It was a lot harder than it probably should have been, but people could still do it.
Yeah, well, of course, during the crash of 2008, you could, if you had a restaurant and all of a sudden your restaurant traffic dropped, you could still operate, you could still try, you could do things, you could have coupons or 2-for-1s, or stop serving lunch because you weren't making money at lunch, and serve dinner only. You were still out there. Companies were scrambling around trying to restructure, retool. But this is different. When you literally tell people to stay home, basically you've got economic activity cut in half, according to the Atlanta Fed, and you've got the Fed's balance sheet quickly doubling. So, it doesn't sound like a recipe for prosperity to me. And right now, the most important thing we can do is just get back to work. And, we have to let these governors know. People just have to go out there and say enough. that, it's time for this to be over, and we have to get back to work and start to assess the damage. That's really the job in front of us, is just to figure out where we are, how bad this is, how deep it is, how long it lasts, because we can't stay home any longer. We can't justify the economic damage that's being caused, even for 100,000 COVID deaths.
I completely agree. And unfortunately, government, there's really bad incentives, disincentives. It's incredible distortions that governments and central banks have done. We're recording this interview on Friday, May 29th. We have over 40 million Americans have filed for jobless claims in the last 10 weeks. But what's been interesting, Jeff, is the research that's coming out that a lot of Americans in these states that have filed for unemployment, they're making more money not working. So that's a problem with Congress and all these different state governments, that they're actually paying Americans more dollars to actually not produce and not work. So of course they're not going to want to go back to work until that goes away, that subsidy, because it's clearly subsidy. In a free market and capitalism, that would not happen, where people are getting an extra $600 a week to not work. So until that goes away, the economy is probably not going to be able to start recovering.
Well, and also let's remember, there's an awful lot of people who wanted all of this stuff even before the coronavirus. In other words, a lot of people think that the material wealth around us just sort of coalesces, and nobody has to go out every morning and produce it, and that incentives don't really matter, that we just happen to live in a wealthy society, and that wealth will always materialize regardless of what government does, which of course is dead wrong. And so a lot of people think that we should have some sort of universal basic income where people get paid every month. A lot of people think we should have free rent and no mortgages. A lot of people think you should just be able to stay home and have free healthcare and get paid for staying home, so that you can work on, your more artistic side, or write poetry, or do whatever you want to do, and not be subjected to this horrifying, brutal capitalism where you actually have to work in order to pay your rent or to buy groceries. There's an awful lot of people, a significant portion of Americans think that we're so wealthy as a country that we can just pay people, to have a pretty decent baseline lifestyle, and they don't have to work. I don't agree with that. I think that's crazy. I don't know what to say to people who think that, but they're out there. And so this is opportunism on the part of a lot of the political class to say, aha, we told you that this capitalist stuff was unstable. Look, the minute a virus comes along, all of a sudden we're shut down and we don't know how to deal with it. And people need food and groceries and free rent and, Medicare for all and all these other things. So politicians never miss an opportunity to seize some more power over us when something like this happens. And, none of us expected this. Really, the whole Trump phenomenon was probably based on whether or not he could make it to November without a stock market crash, or without some other kind of financial crash. And he couldn't. The coronavirus came along, and here we are. So, none of this all of these things are part of the wish list of the left. The virus, whether we have a virus or not, and some sort of universal basic income is always at the top of that list. This is nothing new.
Well, the Dow is back over 25,000. So, all this central bank intervention, and it's not just the Fed. So it's the Bank of Japan, it's the European Central Bank. There's been $20 trillion in emergency liquidity injection, which they're telling us, you were talking about liquidity injections. They tell us it's short term. There's no way to know this without actually auditing and checking if those liquidity programs are being pulled out of the system or not in the near future. But $20 trillion in only a couple months since February of government fiscal spending and central bank intervention. So people are not just going to hold those dollars and euros and yen. It's going to go somewhere, and it looks like it's gone back into the stock market and caused a stock market rally, even though there's really, for all intents and purposes, very little actual economic activity going on right now.
Yeah, we have to understand is that people aren't going to just put their money in the bank and save it, because you're only getting 1.5% maybe, or less than that. There are, 10-year treasuries were below 1% up until recently. So the idea that people understand that real inflation is higher than that. So as a result, they're almost forced to go out into equity markets and try to chase yield because they're not making any money just by saving it. So, you've got people, let's say later in life, who ought to be completely out of the stock market, just getting a safe return from a CD or money market fund. But instead, they're out there investing in Apple or FANG stocks or, Uber or Tesla or whatever it is, because those have been the hot stocks for, over the last couple of years. And they think, well, I got to get some of that because if I just leave my money in the bank, I'm losing money to inflation. And that's what's so sickening about low interest rates. They really distort the natural human tendency to save money for a rainy day. They force people into markets who perhaps don't have the expertise or the risk profile to be in those markets, including older folks. And this really bothers me. I mean, saving is part of capital accumulation. Capital accumulation is part of the natural human desire to leave something to the next generation, to build society, to have each generation slightly wealthier than the one that came before it. And that's basically almost always been the case, at least in modern human history. And now we're facing a situation where the millennials may end up poorer than their baby boomer parents. And that, if that turns out to be the case, so far that is the case. But if that ultimately turns out to be the case, that's a tragedy. And that's something that, America has always been a hopeful country. It's never been a perfect country, but it's never had that kind of European fatalism, that deterministic outlook where this is just the way it is, and we're living. Italy used to be the Roman Empire, and now it's just this sort of sclerotic, union-ridden, failed economy, and we just sort of live la dolce vita and sit here and eat delicious food and lament what Italy has become. We haven't succumbed to that in the United States. We've never had that sense that our best days are behind us. I'm in my early 50s, and I certainly remember in my own youth, my coming of age era, the decade of the 80s, I had an awful lot of optimism and I sensed that all around me. I mean, there were problems. There was certainly the Cold War and Reagan and Gorbachev and all that stuff. But the general sense was that my life had opportunity, and that things were going to be generally better, and that I would probably have more opportunities than my parents had. And man, if that is gone today, and it sure feels like it's gone for 20-somethings, then we really need to take a look at ourselves in the mirror and figure out what we're doing here in America.
Well, we're seeing on TV right now, look at all the social unrest. So there's a lot of people that are brainwashed that think they haven't studied what the bad things about socialism, what happened in the Soviet Union, what happened in Mao's China, how at least 100 million people were killed by their own governments in the 20th century by communism, socialism, Marxism, all the different types of big government collectivism, fascism too.
Yes, it's never been easier to have all this information at your fingertips. We have this little thing the size of a deck of cards in our pocket called a mobile phone that has, basically all of human history at our fingertips instantly, almost for free. And yet, I don't think Americans have ever known less history than they know right now. Even with Google and everything else, the amount of historical ignorance about socialism, about communism, about the 20th century, the causes of 2 world wars, the cause of the Great Depression. It really is something. We're bombarded with information, but we really have far less knowledge and far less wisdom than our grandparents had.
I totally agree. And the Mises Institute does a good job with this, with the writings of Murray Rothbard, Henry Hazlitt. More advanced is Ludwig von Mises. People should probably start with the basics first before they get into von Mises, though.
Well, we have a lot of free books at our website, Mises.org. We have books that are very, very short, like Rothbard's What Has Government Done to Our Money, all the way up to huge treatises like Ludwig von Mises's Human Action. So if you're interested in economics and feel that that's something that's missing in your own intellectual arsenal, that maybe you didn't study it in high school or college, or you never really got a good grasp on it or something, we have something for everybody. And really, economics is not something that you can afford to just leave to the experts. And I think that's a big part of our problem is somewhere along the line, we allowed economists, especially central bankers, to convince us that they had some sort of technical expertise that was beyond the ability of the average person to understand, almost like a NASA scientist. Well, you really shouldn't spend your free time reading about aerospace engineering because, come on, you're not an aerospace engineer and you're not going to do that for a living. And this stuff's really technical and difficult. So just leave that to the experts because we're going to send, a Land Rover to Mars. Well, okay, but that's different than economics. Economics is just a subset of human action, and it's far more cognizable for most of us. And it's something that, it affects us every day. It's really what we get up and do every day in our economic lives. So it's not something that you can just afford to ignore, especially now.
So if my listeners want to get a copy of the ebook Anatomy of the Crash, how did they do so?
Just go to our website, Mises.org. We have a revolving homepage hero there that arrows back and forth. You can see the cover of the book and just click there, and you can either download the PDF or just read it on your machine right there if you care to.
Thank you so much for your time, Jeff. I really appreciate it.
Thanks for having me. I really enjoyed our conversation.